Everyone says the real estate market is tanking and we're going to see a bigger crash than what we did in 2008 coming into 2023. I'm here to share the facts so that way you can understand exactly what's going on. I'm going to provide some insight on why most experts are going to be getting their market predictions for 2023 wrong. I think everyone realizes that the real estate market is obviously going down. The massive amount of appreciation that we've seen from 2021 and 2022, it was bound to happen. We could not continue to go on at this rate. It's honestly just not good for the overall economy for home prices to go up over 30% in 1 year. And it's horrible for people trying to get in the market because now they're currently priced out. What a home was a year before was 20-30% more. And it's so funny how in today's world that as soon as some bad news comes out, people just magnify it and just keep ramming it home and just keep stressing the points as soon as they hear that interest rates are starting to go up. But here, I'm going to share with you exactly what's going on in the market and where we're at today. So in Canada, the average home right now is worth $637,000. This is down almost 4% from last year, but is still over a 20% increase from the year before. In the United States, the average home is $428,000, and this is a 5% increase from last year at this time. I find it very interesting. A lot of people are predicting that the Canadian market is going to see a bigger crash than the US, and I would love for you guys to drop in the comments below what you think is going to happen. Will the US or Canada market see a bigger dip? But comparing this to the States, this is still a 30% increase from the year before, so the US market is technically still performing better than it is in Canada. We've seen a 36% decrease in the amount of sales, with over 100% more inventory on the market. Yes, interest rate is playing a factor, but now we've currently had the shift from an extreme seller's market to now coming into a buyer's market. And with everything else going on in the world, this has neutralized the heat that we saw in the real estate market the last couple of years. I get this question all the time, like who's still buying homes? So here's the stats on who's currently buying. First-time home buyers is around 15%, mover-uppers around 17%, downsizers around 15%, and then investors around 17%. And the people who are buying the most homes are similar properties. So this is maybe the family that had a $800,000 home. They wanted a little bit more space, but it's not considered a big move from like a condo to a single family. And they made up about 25% of the market. So all those combined make about 72% of the overall. And we have about relocation around 10% with a few other factors meshed in there. So those are exactly who is still buying homes in today's market. Now the golden question, is this potential downturn in 2023 going to be like 2008? And I'm here to share why it is actually completely different. It's certainly not good, but it is definitely different. So one of the major causes of what's going on right now is the general inflation. There's no secret. You turn on the news, everyone in their right mind is literally losing their mind over the amount of inflation. And when you go to the grocery store and you used to only spend maybe about $60-$80 a week for your family's groceries, now all of a sudden I'm spending $150 a week, which is definitely like almost double the amount that I used to spend on my weekly groceries. This is stuff that definitely pisses off, but it affects the real estate market overall with the amount of inflation we have. The second point is we have better lending. So in 2008, the US became famous for giving people loans that had no money down and they had no income. And I'm going to touch on later in the video exactly what it's like for current interest rates and what's going on in the lender environment so you can understand better. But comparing this to 2008, there's no way we're going to see as many foreclosures or a massive sell-off, because people who now get approved for mortgages are almost 100% guaranteed that they're going to be able to pay those. And I'll share the stats on the percentage of people that actually foreclose. And the third point, and the biggest reason why we will not see a crash like we did in 2008, is the housing crisis. From 2008, we've had a shortage of housing being built. So now that we transition to 2023, we're still not keeping up with the demand of housing that needs to be built. So my next point, and something that people get so frustrated with, and that's the Fed and the Bank of Canada, and just thinking Jerome Powell is the biggest idiot ever. I'm not going to be here to one to criticize him. I think he's under immense pressure and has a very difficult job. So the Fed is predicting that they're going to have another 1.25 point raise by the end of the year. If this happens, so be it. Right now, I know people are just going berserk with how high interest rates are and how fast they are raising rates. But if you look back at 2020, that was the quickest drop we've ever seen in terms of lowering interest rates. So to make up that, just like the real estate market, how it went to the moon, interest rates are now going to have to go to the moon and raise accordingly with how fast we dropped them in 2020. They do expect it to be around 4.4. So this will mean that mortgage rates are definitely going to be going up and rising into 2023. The Bank of Canada did just raise their interest rates not too long ago, and they're expected to do another rate hike to finish the year. They're currently the highest interest rate out of all G7 countries, and they're predicting to end off about the 4.25% by the end of the year. Now, this is something that I have a massive struggle with and feel for people around my age and everyone trying to get into the market. Real estate affordability. It's kind of a catch-22 because for people like your parents or your grandparents, you're absolutely stoked on them that they're able to sell their properties for so much money and finally profit and really build some wealth through real estate. But now trying to get into the market, I'm very thankful that I was able to buy a lot of rental properties a couple of years ago, and it's awesome for me too to see them out that they're appreciated. But I still feel bad for people that are trying to get in and the real estate affordability. So let's actually go through the facts on what it's like to purchase a home and what the current rates are. With the average home price of being around $637,000 in Canada, being able to save for those down payments, you're no longer able to do the 5% down mortgages once you get over $500,000. And this does eliminate a ton of first-time home buyers who are struggling to save for a down payment. The same in the US, because right now we're seeing with such high inflation, people are struggling to save money, and you're going to have to, just with the way that property prices are rising, you clearly have to save that amount of money extra for a down payment to get into the market. So what can you do in order to get that? My advice to people, and it's probably something that they don't want to hear, is you're going to have to start off smaller. So the people that wanted to get into the single family home and were waiting to buy a standalone detached home, you're probably going to have to settle with getting into a condo if home ownership is the route that you want to go. It's not a negative thing. I've helped many clients and seen many people that have purchased condos and lived in it for a couple years, and then the equity they've built, they either sold or my personal favorite is you keep that property and rent it out, and then you move into that single family home. I just helped a family buy a home last week where we calculated the numbers. Even with high mortgage rates, they're able to keep their condo that they currently live in, rent it out because they bought this property a couple years ago, so it is cash flowing, move their family into a single family home, and a home that had a suite downstairs. So not only by moving up into a better home and a better environment for their family, this also cut down their actual expenses, and they got to keep their condo, and they were able to do it with refinancing, so it didn't take any extra money out of their own pocket. They refinanced that condo, took that money to buy a single family home. Both these properties, or this condo, is now making positive cash flow even after the refinance, and their family was finally able to buy that single family home, which lowered their actual monthly expenses, which is pretty crazy to see with the current interest rates. It is possible. You just have to be a little bit savvy and know how to work the numbers, and that's what I truly love doing and helping people. And it's not as complicated as you think. It's relatively just simple math. You have to know how to refinance the property, what to rent it out for, the cash flow rates. But I guarantee if you look at it from that angle, and we can get you to save more money monthly by moving up into a bigger home, even with inflation doubling your groceries and you're spending more money, this is a way that you can start saving more money and investing and getting ahead when the market's at an all-time low. Like right now with the stock market being so low, if you can start shelling away $500 extra a month because you moved up a property and have more cash flow, that's something that you need to explore. So even though with property prices being at a massive high, do not think homeownership is not possible for you. Personally, reach out to me. My Calendly link will be in the description. If you need a little bit of a creative financing way or something, how you can get in the market, I'd love to explore that with you and help out in any way. Interest rates. So this is a very interesting one because so many people think they know exactly how interest rates work and how obviously interest rates and borrowing power inversely proportional. As one goes up, one goes down. And everyone touches on how now the doom and gloom that there's going to be foreclosures after foreclosures, and it's relatively not the case. So here are the mortgage facts on what people are doing who are still getting mortgages. So 53% of people are doing conventional loans. So that means that they're putting down more than 20% on the property. So with the all cash, we've seen that a lot of times with people who were downsizing, They made all this incredible amount of money on the sale of their property, and when they were able to move down into the market, they did it with all cash. And the same way works too with other people who are upselling and upsizing. They might have had some investments, and then the equity from their home, they were able to purchase that next property with all cash, which was pretty unique to see. So 36% of properties that are being purchased right now are all cash. And then the last is 11% are high ratio. So this is less than 20% down and insured mortgages. But these are kind of different in their own realm, because people typically do get on an insured mortgage a better interest rate. So their payments, they get a break on what the interest rates are because they do get insured from the lender. But this is nowhere near what they were in like 2008, where you're getting the no money down, no income. These people still have to qualify on income, credit, and down payment reasons. So it's relatively unlikely for them to default. The actual statistics in the US, it's less than 1%. It's actually 0.05% of people foreclose on their mortgages currently, with Canada being at 2%. Even though Canada does have more stringent lending rules with a stress test and things like that, make it a little bit more difficult, Canada does on average see more foreclosures than the US does right now. So for all those people thinking they're going to sit on the sidelines, scoop up all these foreclosures, I'm not saying that's not possible, but it's relatively unlikely, especially if you're in the US market, if less than 1% of people are foreclosing, and how many other savvy investors and stuff are going to be scooping those up. It's going to be a lot of competition. You probably aren't going to be making the premium like you did in 2008, when I knew some big time investors that were buying all these properties on cents on the dollar, and then able to either refinance or liquidate them 5-10 years later for a massive upswing. And in terms of going variable or fixed, I would say you have to reach out to a mortgage professional and talk in that. I have a lot of clients that are in the process of renewing their mortgage. Their 5-year term has come up, or they're variable for. Explore each option, but the biggest thing is you want to see exactly what your mortgage broker is going to provide you. Like for me, for my rental properties and stuff, I did them all at fixed rates, and don't get me wrong, like a year or 2 years ago, I would have loved to be able to maybe access some of that equity without a penalty. But I'm definitely happy now that interest rates have gone up, and I know exactly what my expenses are each and every month with my mortgage payment there. So it relatively just depends kind of like your risk tolerance and what your mortgage broker advises you. I know most of the time they do advise you to go towards a variable rate, and I don't know, I can't predict the way that the market's going to go, and that might come back. I hear people saying variable rates are going to go to 10%. Is that likely to happen? I think that's just people being too hubris and trying to pump up a point, and it's unlikely to happen. But just understand whatever decision you do make, that you got to be able to accept the consequences. So if you are going to variable rate, understand that potentially can I still afford this mortgage even though if it maybe gets up to 7%? Can I still do that? Or does it make sense to go at a 5-year fixed at like a 5.2% interest rate right now? Or you can do a 2-year fix, but just have that conversation with your mortgage broker. And now the final question and the tip that everyone always asks us, or asks me, just knowing that I'm big in the investment sector and stocks and real estate: where would you put your money? And that goes down to your personal goals too. And I always challenge people with this, is I still believe to this day that 90% of people, the best investment you can make is in real estate. And it comes down to a few different factors, that just for the relatively control that you have over that property and the inability to sell when times are tough. It's a lot easier to, at home, you buy those stocks on your trading account, your brokerage account. I can sell those in an instant when the market opens on Monday morning. But your real estate portfolio will take a lot longer times to liquidate. I like it for that factor too. But my challenge for anyone in the market right now is, now is a great time to buy. Even you hear all these crypto people talk about how good of a time it is to buy. But what happens if that money sits there for another couple of years and does nothing? Who's to say that the market's going to recover in a year or two? I'm not going to go back and reflect on all the historic data of how quick the market tends to recover. But it's just a question you need to ask. And that's why the direction I'm pointing people is, go where you think you can beat inflation. With inflation being at 8%, the only 100% guaranteed bet I know where you can make that up is typically in real estate. So still to this day, I know all my real estate is going to return me 18% with everything factored in. So if you're still able to purchase this property even with the high interest rates and make some cash flow on it, and beat that 8% of inflation, and you get total control of it. There's really relatively no better place to put your money right now, especially when the market's going down. I know everyone's saying, hey, don't buy real estate. It's the worst thing you can do right now. And yeah, you potentially might buy it and it will go down. That's just the nature of it, right? But sitting here predicting the woulda, coulda, shoulda, I know just with my real estate portfolios, I'm getting that pay down each month on my equity. I'm getting that appreciation when the market is going up. And all those factors relatively keep me really safe just on my margin of safety. But that has to come down to your own personal goals. The person that thinks, and this is something that everyone gets wrong with putting their money in, is they make an investment and they think the next day they're going to become a millionaire, where it's not the case. It doesn't matter what you do. Even if you buy that stock that goes up 5x, you're not going to end up being a millionaire. So especially in these times of uncertainty, just go with the safe bet and what you know the most. And for me, that is real estate, and that's the direction that I'm going to be pointing everyone in, is where can you actually beat inflation. And even with high mortgage rates and property declining, I still can say that you'll make an investment that's going to beat inflation, which is the biggest thing you want to do. Thank you everyone for watching. My goal here is to give people the need to know information on the real estate market and what they should look for and what things don't really matter. I'm going to make sure that I look at it from every angle and that I'm giving you an unbiased opinion that's not just helping my own agenda, any of the advice that I'm giving people. I truly do believe that real estate is the direction and the best path for wealth. There's no secret. 90% of millionaires that didn't come from money did it in real estate, and that was exactly why I started buying properties at a very young age. I knew my circumstances. I certainly wasn't going to inherit any money, and I was working a good paying job, but I knew that I had to get into something that I could leverage. But I want to hear from you. Challenge me on my opinions on what you think the real estate market is going to do in 2023. I love hearing what other people have and learning, and if someone can prove me wrong, that's even better, because then I'll be able to make sure that I set up my personal finances accordingly. And that's my other goal here, is I want to be your go-to guide for everything real estate. So you want to subscribe to this channel so you get notified every time I'm posting a video, and I look forward to providing some more good content for you people. Thank you very much.